Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, a $1 trillion miscalculation. Last week, the Bank of Canada announced Canadians now had $1.5 trillion in mortgage debt with interest rates rising. What does that mean for the average person?
Well, what it means for our listeners, what it means for me, and what it means for you, anyone who owns a home or relies on the Canadian economy for household consumption numbers, it means that all the calculations that you're seeing done out there are faulty calculations. What I mean to say by that is that we're seeing mortgage debt pretty much stalled at $1.5 trillion. The mortgage debt is not going to go negative unless we quit building houses. So if we quit building houses, then our economy is in even worse shape, Jim, because we need those 200,000 plus new homes each year, whether it's condo or single detached, to house our growing population. So your mortgage debt always has to increase. And when they announced the October number at 1.534 trillion, I think is what Bank of Canada said, it just is a little tiny increase over last year, Jim. I think it was up at about 3% more than what it was at this time last year. So what that means is that even though Canadians are paying off their mortgage debt at a historical rate, like they're paying off their mortgage debt quicker now than they have ever in their history in terms of the sheer amount of mortgage debt being paid off each month, that we're still booking a little bit more new mortgage debt to keep us positive. And that's because your new housing stock. But what your listeners should really understand is that net wealth, that home ownership wealth, the number that Statistics Canada, the government of Canada, British Columbia government, every bank forecasting that's done across Canada, where we look at Canadians' net wealth, and then they make calculations about what's going to happen in the economy. We were looking at StatsCan the other day, Jim, and I want to let your listeners know this. If you simply make a single calculation change, you change the methodology to how StatsCan measures net wealth in this country. Even if housing prices, real housing prices, did not change 1 penny, a correct methodology for calculating the net wealth of Canadian homeowners drops the net wealth by over $1 trillion. What I'm saying, Jim, is I'm saying that Statistics Canada, the Bank of Canada, the Minister of Finance, Bill Morneau, CMHC, Evan Siddell, all of the bank economists, all of these people who have been estimating net wealth of Canadians are calculating it wrong. We went on, Jim, and someone asked us this question, and we went in and did a little bit of research on it, because what I was told made no sense to us. So the number that I was told simply was ludicrous. It made no sense. It was way, way, way too high. And I said, that can't be true. What are they saying? And then they showed me the data They showed me the source where they got it from, which was StatsCan, and they showed me how they were calculating it. Well, I sat there with them, Jim, with the calculator, pulled out an old calculator out of my drawer, and I punched in some numbers. And when I hit the equal sign, it was $1.14 trillion gone. What I'm saying is that imagine the stock market being misrepresented by $1 trillion in Canada. The TSX being misrepresented by $1 trillion. And that's exactly what's happening with the home ownership stock right now. The reason why there's $1.534 trillion worth of mortgage debt is because people are trading homes. That trading of homes automatically creates home ownership wealth. In other words, it causes house price inflation. In a little bit over time, there's nothing wrong with it. And I was shocked to find out that Statistics Canada does not adjust for that by any measure of account at all. I'm sitting here with the people who supplied me this, asking for our input in it, and I'm sitting this with an old, I think it's probably a 1980s calculator that I've got that I pulled out of the drawer. I use that for dramatic purposes when I'm discussing these items. And I'm sitting there glaring with a couple pushes of the button is a $1.14 trillion gone, disappeared. Now, that $1.14 trillion never existed. The methodology used to calculate net wealth by Statistics Canada, the government of Canada, is simply wrong. It gets worse, Jim. It gets worse than that. We deflate house prices when we get the data in. So we get the data in from across Canada, and then we look at where those sales were taking place, and we have to allocate them for each category of home. We have to allocate them for what city they came in, what neighborhood they come in, blah 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 blah. All that is done. It's very quickly done by us because we have our spreadsheets are all laid out. That when the data comes in, we can quickly fill in each of the blanks. Over a course of a few days, we can cover the full country, and we get an updated valuation. When we're sitting here and we're looking at these numbers, Jim, we're looking at these numbers. Right now, with a calculator, I can remove $1 trillion of net wealth from Canadians overnight. I can do that simply by measuring the housing stock the way that it's supposed to be measured. Not using a few homes that have sold in a month and not making any adjustments for what homes have sold. Simply on a provincial breakdown. Simply if we go in and we change the calculation of net wealth for Canada held in Canadian homes, and we simply adjust it for the provincial housing stock. Not even within the province, just for the number of homes that exist in the provinces. We drop the average selling price by over 10%. If we go ahead and separate the housing stock between rental stock and ownership stock, we drop the price another in excess of 10%. Then if we go into municipal breakdowns, we can get another 20% reduction. So, as we started this conversation here, I'm telling you that Statistics Canada has miscalculated, overcalculated the net wealth of Canadians as of the last census in 2016 of $1.14 trillion. That $1.14 trillion does not exist. It is an error in their methodology. And that is only the tip of the iceberg. As the housing market rolls into the correction, which we're into correction now, and as your housing prices roll over, the reason why we know that what's coming is because we're reading the market a year, 2 years in advance. What happened a year ago, what happened 2 years ago, you're only reading about it in the papers now. Vancouver, you're going to read about the housing market in Vancouver in the next day or two from the Real Estate Board of Greater Vancouver. And what you're going to be reading is what we read in the market a year or 2 years ago. The same way that Calgary, on Friday, they were told that their housing market had dropped another 3% and that their sales had collapsed. And they were trying, the local real estate board was coming up with all this, we've had lots of new listings. So that caused housing prices to drop. All these big answers they try to come up with because they can't read the market. When we're saying, if you listened on this show a year ago, you could have heard us tell you that Calgary this year was going to be off another 3 to 4%, which is exactly what they reported yesterday. So what I want your listeners to understand is, you are going to hear some devastating financial numbers. The truth of the matter is, the illusion of wealth that has been created by false use of housing prices is of a historic proportion. We, with a calculator, with 12 simple data points, provincial housing counts, reduced the net wealth of Canada by $1 trillion without housing prices changing one iota. That is dropping each day as British Columbia and Ontario housing prices decline. People who are relying on jobs from the housing market, household consumption, those jobs are going to start to hold up. The Bank of Canada, we're hearing now about the Bank of Canada having a hard time raising interest rates. The bank economists are starting to come out with. When on your show a year and a half ago, we talked about the interest rate trap, how the Bank of Canada is not going to be able to raise rates the way that they think they are. These things are all coming true. Your listeners need to take defensive action. They do not need to be listening to people that are telling them this is a buying opportunity in the housing market. This is an opportunity to take a variable rate mortgage. You need to be getting the real advice, because if you don't, you're going to believe what Statistics Canada is telling Canadians. They're actually $1 trillion poorer than what StatsCan said they were.
We'll have more with Ross Kay right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Ross Kay. Ross, Australia's housing market has been cited in comparison to Canada's the last couple of years for its housing bubble. Are you seeing any trends in one country today that could be used in reading the other country's market?
Actually, what I would say, Jim, is that you can see the trends in each country's markets, and those trends, because they're identical, simply give us corroboration of how we measure housing markets. So I know in Australia, I don't know, CoreLogic, that their big data collection company is called CoreLogic. CoreLogic is an MLS system provider. That's how they got their start in the business. They supply MLS services to real estate boards across Canada and the United States. They bought the Case-Shiller Index. It's just a company that is built on housing prices. for the sake of the argument. I know that their report is due to come out for Australia. If it didn't come out today, I haven't checked. But in Australia, they're going to see housing prices are going to have declined again. Now, you're also going to hear about how some areas went up in price and other areas went down. And people are actually going to believe this nonsense instead of believing the whole housing market moves en masse. When we look at the Toronto Real Estate Board, for the sake of the argument, Jim, the Toronto Real Estate Board separates their data, I think, probably over 30 different areas. So they will have benchmark prices for over 30 different categories of homes. In the city of Toronto itself, like right in the city of Toronto, this would be like saying it right in the city of Vancouver, not the greater Vancouver area or not the Vancouver CMA, but right in Vancouver. In Toronto, they do that and they separate it by, I think there's 45 different regions in total, between 40 and 45 different areas that they break it down. They broke it down in those areas for over 25 years. So this isn't something new. The benchmark prices in those 24 areas, or those 45 areas in the city of Toronto, show widely divergence in prices. In other words, what they want people to believe is, if you buy in this part of the city, your house price would have increased 200% over the last 5 years. If you bought in this other part of the city, your house price would have increased 50% over the last 5 years. It's nonsense. It's the same nonsense that you're going to read from Australia. The housing stock and what is selling in those areas has changed drastically and differently in each one of those 45 different areas of Toronto. It has changed so radically in some areas that the type of house that is selling literally is worth 200% more than the type of house that was selling 5 years ago. It's not the same house. It's a totally different type of house that is dominating the sales in that neighborhood. And that's how you get a 200% gain in one neighborhood and a 50% gain in another neighborhood. It's all hogwash. It's all nonsense. The overall housing market moves in a solid line. It follows a curve. It has to follow the curve because one home sale is predicated on a previous home sale. That's why you call it the sales chain. And I'm sure what you're going to see in Australia is they're going to say some areas went up, some areas went down, the overall market went down. And we would say that's not the truth at all. The overall market is down because the entire market is down. The same as we will say that's what's happening in Toronto. What we won't say is that some of those more desirable neighborhoods, people are no longer buying in the least desirable neighborhoods because now they have the option. They buy in the more desirable neighborhood. It's no different than in Vancouver, where you used to spend $1.4 million on a house that you couldn't even live in. In other words, it was falling apart so poor. It was so poorly in such a state of disrepair that the municipal government wouldn't even give you a permit to live in the house, and you were spending $1.5 million or $1.4 million, and now you're spending $1.4 million and getting a nice house. It isn't that the price of houses, or one certain part of the market saw higher house price gain, while another saw a lesser house price gain. It's just that where people are choosing to buy. They look at the options and they choose wherever they get the most for their money. It's no different than someone offering you a Cadillac and a Chevy. If both cars are $20,000, they're the Cadillac, but the Cadillac is really worth $40,000. Most people are going to choose the Cadillac for $40,000, but only pay $20,000. And that's exactly what's happening with these housing stats all over, Jim. So I suspect you're going to see in Australia, when it gets released, The housing market in Australia, housing prices are dropping, but the real estate agents, the government, the bankers, everybody's going to say, but some areas went up and some areas went down. And we would say hogwash. The overall market is down, and that is the only thing that matters. Home buyers, yes, they are going to be fooled. They're going to be fooled by real estate agents, bankers, economists, and academics who comment on the housing market who don't understand how a housing market works. That is true. They're going to be fooled. They're going to make a mistake. The same way that they're making a mistake in Toronto. If you believe in one neighborhood housing prices have gone up 200%, in another neighborhood they've only gone up 50%. Yet the overall housing market has gone up 60%, and the reason why that 60% increase took place in the first place was because people were buying where those houses went up, where the quality of home jumped up 200% over the last 5 years. It's all illusion, folks. It's all nonsense. They get the same nonsense in Australia, same nonsense in New Zealand, same nonsense in London, England, same nonsense in Dallas, Texas, same nonsense in Vancouver. It's why you get housing bubbles. It's why housing bubbles pop. It's why families are wiped out financially in a housing bubble, because people do not understand the basics of a housing market. They all function the same. They all work the same. They all follow the same path. It's only how quickly you get there.
We'll have more with Ross Kay right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTC QB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, today Bloomberg quoted the owner of Canada's biggest home builder saying the market is cooling differently this year than it did back in 1989. Can we trust what he was quoted as being as true? What's different?
Well, what's different is, Jim, is back in 89, that builder called our family and asked us to take their entire subdivision over. That builder called us in 1990. This is Mattamy who you're talking about, and it's Peter Gilgan is the owner of that company. They called us up, and they wanted us to take over the entire Millcroft subdivision in Burlington. So that was their big move. Millcroft was their big move into the Canadian marketplace. I mean, you have to understand today the size of Mattamy. They do 9,000 homes a year. They are one of the largest builders in North America. Certainly Canada's the biggest builder. What I read in that article, I read the same article. The owner of Mattamy stated that the housing market in Ontario turned overnight in April of 1989. That's what he is on the record on the Bloomberg article saying. What we would say was, you know something, if you had listened to us the year prior, when we were telling our home buyers, don't buy. Do not buy those beautiful new homes that are being built in Millcroft, because the housing bubble had popped. If he had listened to us back then, or it wasn't him directly back then, it was his sales and marketing team. If they had listened to us back then, he would have known a year ahead that his forecast that he states in the newspaper of April of 1989 was wrong. It was a year ahead that the market in Ontario moved negative. The reason the market moved negative in Ontario was we had a period of interest rates in 1987 that had dropped just below 10% on a 5-year term. we got down to 9.95%. A year and a half later, interest rates were back up to 12.75%. As the interest rates began to rise, the home buyers were being removed from the market. Now, it looked like sales were still increasing, but they weren't really. What was happening is the built-up momentum in the market, the sales chain, the trade-up buyers, they kept buying. But because we measure first-time buyers, we knew they were coming out of the market because they no longer could afford to buy a house at the higher interest rate. They were going to have to wait for housing prices to drop. The owner of the largest home building company in Canada today still believes that it was April of 1989 when the Ontario housing market turned. And what we would say is, no, a year before, we told everybody the market was turned. Nobody wanted to listen to us then. We turned our entire business into a listing business back then. We listed homes for sale. We weren't even selling them. This builder is in the paper today saying the moves by the government, and he's even actually trying to take some credit himself, his own firm, trying to insinuate that his firm wanted all of the policies that got enacted to be enacted. In other words, he actually wants the reporter that did the article and everyone who reads it to believe he wanted to earn less profits this year. He actually wants you to believe that nonsense. At the same time, he's saying that, oh, it's different this time. This time it's different than April of 1989 when he last read a housing market correction. And what I'll tell your listeners is this, Jim. The correction that is already ongoing in the Ontario real estate market, which members, by the way, CWH members, way back in 2016 were told about this. They have been able to track it month by month by month. So if anything that I'm saying here is wrong, there's a whole bunch of people who've been able to track it month by month by month from way back in 2016. This housing market is rolling over far more rapidly and with far more volatility than it rolled over back in 1989. The single largest builder in Canada's history is in Bloomberg today, citing April of 1989, which was a year too late, and now he's citing today that the housing market is cooling differently than it did back then and that things are going to be okay. Well, you know something, Jim? A lot of families believed those people back in 1989 because in 1989, they were saying it was still going forward. It wasn't until a year later that they went back and backdated it to April of 1989 because it didn't appear in any newspapers. There was nothing about the housing correction going on until the next spring. He's trying to tell people today to go out, buy a house at peak pricing with interest rates rising and housing sales collapsing. There's a reason why people who purchased his homes a year ago cannot sell them for what they paid for them. There are people who have bought pre-sales who are going to close in their homes, and the home is going to be worth hundreds of thousands of dollars less as of today. 6 months from now, it's going to be even deeper. This article, all of your listeners, Jim, anybody who's listening to the show, Google Bloomberg. I believe it's Natalie Wong was the author, and it's about Mattamy the builder. And the real irony in this, Jim, is the following. The model home that particular man used to build his empire is the entrance home to the Millcroft subdivision in Burlington. It is a stunning white aluminum vinyl-sided home, which was, now this is cutting edge at the time, so it's not like this was to save money. 3-car garage, classic white and black, office over top of the 3-car garage, stunning. It's a house right out of a magazine. If you look at it today from a picture, you'd swear it's out in the country. And really, it's right at the start of a subdivision. That home went up in value 200%. There was some family who was convinced that from when the time they built that house to about 3 or 4 years later, that house had increased 200% in value, and they bought it. That family lost that house. it ended up selling at 100% discount. In other words, the price of the house had dropped 50%. All of the gain that they thought they had made was gone. In another couple of years, that house increased in value again 60%. This is all during the 1990s correction, the correction that nobody knows happened. That gain that those people made was wiped out when they lost the house. So between 1989, April of 1989, based on what he said in the article, through till the fall of 1995, that's what happened to the model home that this entire company's future was built upon. I also want to let your listeners know this. The fellow, he's a nice guy. He donated, as far as I know, I think he donated upwards of $100 million to the Oakville, to build a new Oakville hospital. His name now, when I drive down the highway by the hospital, I see his name in lights up on the top of the hospital. He did really well. He built those homes. People lived in them. But in the meantime, families were destroyed. There is no need for anyone to go through this. There is no need for it to happen. Step back. Get some good advice. Understand all housing markets work exactly the same. Understand what happened in 1989 that he quoted in April of 1989 actually was signaled a year before. And what happened in the intervening next 13 years was all recorded. It was recorded. It was black and white. A housing bubble pops. Housing prices can only attain a certain value. If you can't sell a house for what the house can be built for, people don't move. We are watching right now, Jim, historic net wealth destruction in this country. There is nothing the government can do to stop it. All you can do is get some advice, look at it in an unbiased manner, go talk to some other professionals to make sure you're not getting fooled, and move forward. But what was said in that article we will keep it forever. Because this reporter has this fella on the record saying that April of 89 was when the housing market turned, which when we said it was a year before, actually more than a year before, but that's another story. And he's saying this year it's not as bad as it was back then. And we're telling you it's worse right now than it was back then. Math is what we use to give our answers. Math that you cannot change. Math.
Well, we get it. Math works. Ross, thank you so much for being on the show.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at HoweStreet. If you have any questions for Ross or for the show, you can send them to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.